Hey, this will be a video chart on LFBG. Very nice mover over the past month and a half, and today got pretty crazy. Had quite a few people shoot me messages asking about it. And pulling up the chart, it definitely did have a crazy, pretty eventful day. The range was very large, so it was a back and forth day. Looked like some bottom bouncers and bottom feeders probably got some nice entries down here as it bounced back up. And as far as the daily chart's concerned, that also looks just fine. It's hanging in there. It would have looked quite a bit, I don't want to say worse, but it wouldn't have looked nearly as good had this bounce not happened. But even if it had closed down here, it would have still been technically bullish, and I'll explain why that is. But first, let's just kind of start off with a quick little recap of how the stock's been doing. One of these things where it makes a great example of why you should keep an eye on volume. You can see that this stock had been very quiet, and then all of a sudden out of nowhere, boom, big volume. Sure, it was a red day, but the point being big volume all of a sudden. So what's the cause of this? And then everybody knows the rest. As history went on, the chart made just very big moves from that initial volume surge there. So had you noticed it there and then saw it started to creep up, even if you had gotten in somewhere in this area or this area, based off of this big volume, you could have still had plenty of upside. So just, I always like to point out things like that because volume truly does do a great job of, preceding price action. And, had you gotten in and nothing ever happened, you could have just cut your losses, kept a small loss, but, so your risk might have been the size of this box, but, so far the reward would have been that big. So just imagine how many of these small boxes you can fit in this thing, and that should, kind of put in perspective why money management and keeping your losses small and letting the winners run can be so beneficial. Anyways, kind of got sidetracked there, but this chart really does a good example of that. But back to the actual chart and what's going on. The first thing I want to note is the daily chart, and that's what people are kind of asking. Is this chart done now after this crazy day? And the answer to that is no. It's still above all its moving averages, actually barely above its 10-day. But you can see right basically where it bounced off of today was this maroon line here, which was a 20-day simple moving average, same thing as the middle Bollinger Band. And that's what you want to see when prices come down and get near these key areas of support. You want to see the chart kind of flex its muscles in a sense and show that there's still strength, and that's exactly what happened today. The price came down here, the bulls said that's enough, and then pushed the price back up to where it closed. So from an intraday standpoint, good sign of strength. Now from the overall standpoint, things are hanging in there. The key support that I'm looking at right now is this 008, and the reason for that is you can see that it's got a very extensive recent history with the price bouncing around it. You can see that that day didn't quite hit it, but there's once, twice, 3 times, and then today 4 times out of the past, what is it, about 5-6 days. The prices come down here and try to get below it. So the bears have tried to push and get closes below this level, but they've been unsuccessful now in about 4 attempts. So this 0.08 is a key area of support, but on that same token, we still do have the middle Bollinger Band here as support. And if this one can hold, then that's where it's going to be probably a much deeper decline, as it would come down here and give this 200-day level a test, I would imagine. But so far so good. I'm not saying it will come down here. All I'm pointing out is if that 0.008 can't hold and then the middle Bollinger Band can't hold, the next area of support and therefore the next price target area would be down here at the 200-day simple moving average. And actually right now we have the golden cross occurring, and the golden cross does get kind of misused, but it's not a leading indicator. It's based off of past information, because remember, they're just taking the average price. So all it's doing is confirming a nice bullish uptrend. It's not saying that anything more is going to happen. It's just confirming. So when you see people out there implying that because the golden cross is happening that some big move's coming, they just don't understand the indicator. Remember, the formula for it is based on past information. Therefore, it's just a lagging indicator, and it's simply a confirmation that yes, this is in a very nice uptrend, but all you have to actually do is draw a trend line, and you can see that the price is in a good uptrend regardless. But nonetheless, golden crosses are good. Don't get me wrong, because who doesn't want a solid confirmation that the stock you're in is in a bullish uptrend? And the reasons it's in a bullish uptrend is because each pullback has put in higher lows, and as long as that remains the case, then these moving averages are going to keep heading upwards. In terms of resistances, really the key one is going to be this 0.012, and after that it's basically blue sky, and if the price can get back up above there and close above it, I'm sure I'll be back to update the video. But if there are any other questions on the chart, please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and with your newsletter subscription you'll get chart setups, trade ideas, educational pieces, all sorts of things from penny stocks up to big boards. So there's a good variety, something for everybody. It is all free, no strings attached. We've been making some good money together, so I'd encourage you to head to the website, sign up, and see what it's all about. One more time, this was LFBG. Thanks for listening.